Ladies and gentlemen, good day and welcome to the Sharda Motor Industries Q3 and 9 months FY23 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions post the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Puru Agarwal, President and Group CFO of Sharda Motor Industries Limited. Thank you, and over to you, sir.
Thank you, Monica. Good afternoon to all. A very warm welcome to all the participants on this call. Wish you all a very happy new year from the entire Sharda Motor team. This afternoon, I am joined by Mr. Ashim Velan, our CEO, and our Investor Relations Advisors, SGA. I am hoping that you have seen our results and have received our investor presentations by now. The presentation is also uploaded on Stock Exchange as well as company's website for reference. Before delving in details, I would like to touch upon some highlights on the industry. The auto sector continued its growth path with strong demand during the festive season in the quarter. PV demand has remained largely unaffected, with OEM order backlogs remaining stable and new model launches scheduled in near future. As a result of increased fleet utilization and freight rates, CV sentiment has begun to improve once more. While large fleet operators account for the majority of demand, small fleet operators' demand has gradually increased. When it comes to tractors, agri segments remain positive across regions owing to healthy reservoir level, higher crop yields, and favorable financing. All these facts which had led to the pent-up demand is now fading, and the sector is facing rising interest rates. However, the sector is witnessing decrease in commodity prices. Commercial vehicles volumes have shown an uptrend owing to increased economic activities and infrastructure developments. The volumes for YTD FY23, that is April to December period, has been positive with YOY growth of 43%. Passenger vehicle volumes for April to December period also registered a strong growth of 32% compared to the same period last year. Another key segment, tractors, registered a 12% growth for April to December period compared to the same period last year. The two-wheeler and three-wheeler registered 12% and 7% respectively for the same period. With the demand for affordable transportation and emphasis on reducing carbon emissions, electric vehicles also play an important role in India's transition to a more sustainable future, as evidenced by E2W and E3W. E2W and W3E sales are increasing across India, including in Tier 3 and Tier 4 cities. Having shared my thoughts on the industry, I will now move to operation and financial performance of the company. We registered a revenue of 686 crores, which is a growth of 19% as compared to Q3 FY22. Our EBITDA for the period, which is the quarter, is 64 crores as compared to rupees 62 crores in Q3 FY22. It grew by 3% on YOY basis. Our PBT for the quarter was 62 crores after accounting for shares in profits in JV and associates. The PBT grew by 16% compared to Q3 FY22. The PAT for Q3 FY23 was rupees 46 crores, which is a growth of 19% as compared to Q3 FY22. On the 9 months basis, our revenue, EBITDA and PAT grew by 23%, 23% and 39% to rupees 2012 crores, rupees 201 crores, and rupees 146 crores respectively. On the balance sheet front, we continue to maintain healthy liquidity position of more than rupees 588 crores in cash and cash equivalents, including investments and bank finances as on 31st December 2022. With this, we can open the floor for Q&A.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and one on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and one. We have the first question from the line of Nirvana Laha for an individual investor. Please go ahead.
Hi, good evening, Ashim, and thank you for the opportunity. So my first question is, most of the OEMs, both PV and CV, have reported good, strong growth on QoQ basis. But our standalone numbers in terms of revenues and JV profits have declined QoQ. So can you tell us the reason for this?
Hi, this is Ashim. Wishing everyone a very happy New Year and good evening. So just if you can repeat the question, are you talking about Q-on-Q growth that has been reported, or you're discussing about versus last year?
No, Q-on-Q, Ashim. So most of the CV and PV players have reported a Q-on-Q either flat or growth. So, but our revenues seem to have declined. So any reasons for that?
Okay. Are you referring to Q2 versus Q3?
Yeah. Q2 versus Q3.
Okay. So I think we have some different numbers. What we can do is maybe we just offline we can align with your numbers on the Q2 versus Q3. And in general, we haven't seen something like that. But if there's some number variation, then maybe we can maybe discuss this offline and we'll revert back to this.
Okay. So I was just looking at, the two major OEMs on the PV side and the two major on the CV side. But okay, I'll get back to you on this.
There's some alignment of data that's needed. I will understand the data you have, because whether it's production, what you're looking at, and I think we'll get back to you if you just email this, and with numerics, then we'll get back.
Sure. And regards to this, Ashim, at one point of time you had said that you would share some kind of index or metric to help with this correlation, because you had said that the sales don't correlate. So can we expect something on that so that this question doesn't get repeated? I understand there's some lag.
Absolutely. So what we are planning to do, we are working anyways with our customers, and for newer products we are emphasizing on value-added sales so that this gets cleared off once and for all. And I think we are just about there, and hopefully we'll have some success where then, it would be a very transparent way of looking at it. So we'll get back regarding that, but the work is underway.
Okay, thanks. And with regards to the JV for the commercial vehicles, so did we slow down on revenues this quarter compared to last 2 quarters, or did the profitability somehow take a hit?
No, so I think we haven't slowed down on revenues, and just because the profitability, we are just about coming into profitability right now. So the numbers are very small. I think every quarter it is 1 crore or 25 lakhs, 50 lakhs. So it's very tough to, with that base have a plus minus on that. In terms of revenues, we've done fine. And there has been no such slowdown in terms of revenues. There's always on a quarter and quarter basis, some bit of variation that would be on profitability numbers, but nothing too much. And the base is so small, so that's why it may be seeming like that. But in terms of revenues, we've roughly done the same or maybe even a little bit higher.
Okay. So last quarter, you had mentioned that the engines are facing some teething troubles because they are new engines and the traction is not as good. So any updated comment on that?
Yeah. So these were new engines which I mentioned. What we are working now with the OEMs is to make all our products modular, right? So that they can go into the old engine, new engine, and then the mix will not have such an impact. So the work is underway, and we are developing with our customers modularity so that we can utilize the same product across engine platforms.
Okay. And where would we be on that journey? Like, have the prototypes, etc., been done, and has it been approved? So do we have an in-principle approval to go ahead for older engines as well? How do we understand this?
Yeah. So we have the approval that we can utilize them modularity-wise. And in terms of we've kickstarted the development work, now it will go through the phases of testing, etc. And we should be getting some success in that soon. But it's too early to say yet. But in principle, yes, we are working with our customers to cross-utilize our products for commercial vehicles across engine families. So as long as the engine family, the size is the same, it can be modularly used. So we should get some success then. Work has already started.
Okay, great. And any indicative timeline you'd be comfortable in sharing on when these things normally run?
No indicative timeline, but it totally depends on the bandwidth of the OEMs and the testing agencies. But the work has started, and we should be getting success. Maybe as we know more on a firm timeline, I'll keep sharing. But the kickstart has already happened.
Okay. And any developments on the export sides on either of the two sub areas, sub-components or small engine exhausts?
Yeah. So we've received a very good response. In fact, we have a very high number of RFQs with us, and we have already quoted for them and are expecting some test orders. And this has also given us the opportunity to get some domestic business from these global companies as well. So on both sides, we are expecting some test orders to begin. And on the success of that, of course, then the opportunity becomes much bigger. In addition to that, now we have an established business development team focused on exports. So we should have some good traction, but still too early to say. But we have a very good amount of RFQs in the pipeline now.
Okay, just one final question. So how many employees do we have in this exports BD team, if you can share that?
Sure. I don't have a breakup of the numbers, but a specific team is in place for export BD.
Okay, and are they based out of India?
No, it's right now based out of India full-time, and we are also developing a network of consultants globally. But in just our type of business, not so many people are required. It's rather the caliber of the people. So we managed a good team, and we are already seeing a good traction from that. And it begins with test orders, and as it develops into bigger things, then we'll keep you posted. But it's looking good, and I think China plus one trend is definitely going to favor, in general, India in the next couple of years.
Okay, that's very encouraging, Ashim. I have some more questions. I'll come back in the queue. Thank you.
Thank you so much. Thank you.
Thank you. We have the next question, the line of Nithi Babaria from Envision Capital. Please go ahead.
Thank you, sir, for taking my question. If you can help me understand our lithium battery segment and what exactly are we doing in that? Is it the sub-assembly thing which we are doing or cell manufacturing, and what will be the revenue contribution from this unit?
Sure. Thank you so much for the question. In the case of the lithium-ion battery business, we are simply assembling the batteries into packs. Right now, it is in pre-revenue stage, and we have a joint venture along with Kinetic. Kinetic Green produces two-wheelers, three-wheelers, and very shortly will be producing golf carts. So as per the joint venture agreement, we begin the activity of simply assembling the batteries as well as the BMS and providing it to them as phase one. Currently, it is pre-revenue, so we don't have any revenues on this quarter from this venture.
And what type of opportunity do we have with this segment? Like, what type of revenue expectations are there from this segment, and from when can this start to contribute?
Sure. So as of now, we are not giving guidance in terms of any kind of revenues, as this is something very new to the company and this is a new venture. In general, as long as all testing goes well, and so far the results are very encouraging, we should start getting some marginal revenues towards the end of Q4. But we are awaiting for all prototypes to be cleared by the testing agencies, and those are underway. And of course, now there are new AIS Amendment 3 compliant norms, which our prototypes were readjusted to, and the testing is going on for that.
Okay. And who would be the peers for this segment, and why, how are we going to capture the market? Is it just going to be the Kinetic JV that we will be working with them, or we will also be focusing to add clients from other EV players like Ola or anyone else?
So for phase one, our focus is on Kinetic, and phase two will be to look at other players also and get either the same product, but most of them do this in-house. So a part of this product is what we'll be targeting, but that is phase two. As of now, phase one would be to Kinetic.
And what amount of investments have we done for this JV?
It is very small investment so far, and our projections that the capex requirement will be very small for this phase one of it, as this is a capex light model that we have opted for. And for phase one, we don't see any major investment in the JV so far. For phase two and three, there may be, but right now it is too early to tell. Phase one looks to be a very capex light kind of business model.
When we say capex light, is it just the assembly thing that we will be doing in our existing facilities, or the assemblies will be done on the customer's plans, and we won't be needed to do investment?
Yeah, we're working on both options. That both options are available, but in general, facilities is a very marginal investment because both sides there's adequate space available. And that we will see based on logistics costs. But in general, capex, it's a very asset-light model on phase one.
Also, if you can help me understand what are the growth drivers for the company for coming 2-3 years, and what type of margin guidance do you want to give, concluding with the capex guidance?
Yes. Sorry, if you could just repeat your question, please, the last part of it.
So, revenue growth drivers for coming 2 years, and what type of margins do we see for the same coming 2-3 years, and the capex guidance?
Okay, so I'll just start with capex. For capex, we expect it to be similar to previous trends, and when the legislations comes, it would be slightly higher, but it will be within utilizing our cash will be more than adequate when it comes to capex. And now in terms of growth drivers, first on the emission vertical, there are multiple legislations that are coming up in the next 2 to 3 years. Number one being RDE, BS 6.2, which starts on 1st April. So definitely going to be maintaining our market share, maybe even slightly increasing in our products, which in general will increase our content per car, LCV, etc. So that is going to be growth driver number one. In addition, TREM 4 and TREM 5 norms are coming. TREM 4 norms have already started. TREM 5 norms are going to start in the next couple of years. And in the case of the TREM 5 market, the entire domestic tractors will also require our emission products. So it's a large opening for the company from an addressable market point of view. And in this case, we are expecting a very solid market share. And touch wood, we have doing very well on the business development side here. And we have already been nominated for a lot of programs here. Then the next growth driver is, of course, on the subcomponent side. So we have started this initiative to export subcomponents as well as emission systems for smaller engines. And for that, in the previous question, as I mentioned, we have good traction. Our BD team is set. Of course, it will begin with test orders, but then the addressable market sharply increases. And another thing to highlight here is that our company is the probably smallest company in the world with the intellectual property required for mission products for all these segments. And hence the addressable market is much bigger than India. And this will be another growth driver for us. Then in addition to this, as a growth driver, we do have our suspension vertical, which is right now not addressed. So with the build buy approach, we will be working not just on suspensions, but also other powertrain agnostic products. And for that, we are looking at deploying some capital in the form of M&A. Given our balance sheet, we have a very good runway there to invest into powertrain agnostic products. And the last growth driver, which is more on the EV side, which is the phase 1, which we have already discussed. And we want to focus on the 2-wheeler, 3-wheeler segment there. And as we gain experience, that would also, in the next couple of years, become a growth driver.
Okay. So if you can help me with some growth numbers specifically, or some revenue guidance of, let's say, by FY25, we would be reaching some X amount of revenues with all these growth drivers, and what type of margin do we expect?
Sure. So in terms of specific numbers, we don't share in terms of guidance. Margins, we expect similar margins going forward as well, but no specific numbers that we give out as guidance.
Okay. If you can help me understand the reason for our gross margins to degrow by 127 basis points on a Q-on-Q basis, and similarly decrease in our EBITDA margin, and what could lead to these margins to go down further in coming quarters, or if margins are going to improve in coming quarters?
Sure. So I would want to say that best to look at auto industry margins on a YOY basis and not on a Q versus Q basis. But either way, that they dip in the margin. There's just general product mix variance that has happened. Then also we have a lot of startup and changeover costs which has come in this quarter, because all our BS 6.2 products are underway, prototypes are being made, a lot of development work for TREM 4 and TREM 5 is going on. So a little bit of that has also added, but it's much better to be looking at trends on a longer term basis to make it more accurate.
Okay, so for these products, what type of raw material pass-through do we have with our clients, and what type of order book do we get from the customers?
Sorry, I got the point of, sorry, if you can just repeat the last two lines.
Raw material pass-through contract which we have with customers, and revenue order book from the customers.
Okay. From the pass-through point, generally it is, raw material is indexed. So it is whether it goes up or down, generally we get it from the customers. And in case it goes down, then we have to give back to the customer. And the second order book thing, I could not understand what you're looking for.
So when, say, some XYZ client gives us order for exhaust system or suspension system, do they give us some specific order book for whatever products they are taking from us?
Yeah, I think I'm not sure what the question is, but yeah, in general, we get an order book, and it's not any specific order book we get nominated for a program. And as they give us guidance numbers on what would be the volumes of that program and how long will that last the program. So a general guidance is given, but then the production and the supplies is based on the demand for that product, which happens on a monthly, quarterly, and annually.
Who would be our major clients?
So that is just, all the automobile companies that are there are our clients, and we are consistently looking to add clients on that.
If you can give me any percentage breakup between any of the
As per
CVs.
guidance, we don't mention client names on investor calls, so we'll just broadly keep it at a good mix of the clients. But we don't in investor calls mention any client name for their confidentiality and privacy purposes.
And who would be our peers?
Sorry?
Overall, for all the segments, who would be our major peers?
Major who?
Competitors.
Sure. And we have two competitors, American and a French company. Those are main competitors. Both are Fortune 500 companies based out of India, but they have a presence in India. Those are main competitors. We do have some smaller competitors, Japanese, etc., for one or two customers. Usually we have two competitors.
No domestic peer?
No, there is no significant domestic player in our product line.
Okay, because I thought suspension and exhaust system, especially suspension, is being done by few other auto ancillaries also in India.
To exhaust systems and emissions, for suspension there are a few players. I don't have their names with me, but there would be few players for suspension. I was referring a previous question to exhaust.
And what would be our market share for exhaust system?
It's different across different segments, but a rough guesstimate would be 30%.
And what would be the market share for other American and Japanese players?
The balance would be split majorly between the American and the French company, and Japanese in one or two segments would be have, but don't have the specific numbers like this across. But I would suggest you can list down your questions, and we will then revert back to you. You can email them and with specific numbers.
Okay. Any kind of expansion?
This is the operator. Ma'am, there are participants in queue. I'm sorry to interrupt. Please could you come back?
Sure. Yeah, sure. Thank you.
Thank you. We have the next question from the line of Apurva from Phillip Capital. Please go ahead.
Yes, thanks for the opportunity. So continuing on the margin front, so even if I look at the year on year, so there is at least 80 bips deep on the gross margin front, and on the EBITDA margin it's 1.3% deep. And normally what we say is we would be in a position to maintain the margin, but what would be that range, whether it would be 9.4, 10.5, 4 or 10.5, because on the revenue of maybe 2,800 crores, 1% would swing maybe 28 to 30 needles. So Asim, can you just throw some exact line on the margin front?
Sure. So I think in a long-term basis, we are very likely to maintain our margins. Now on a Q-on-Q basis, and also on a YTD basis for this quarter, general dip that has come in is also a factor of general product mix variance. And then this quarter also has had startup costs that we have linked to the production and development of BS 6.2, which will now begin production in Q4. And as well as we are working on a lot of development of TREM 4, TREM 5, lot of prototypes. So a little bit would be there. And in general, that we are looking to maintain our margins. But of course, on a quarter-on-quarter basis.
It would be 10.5 or higher. I am not concerned about the quarterly number, but I am just looking for the sustainable margin range, which would be 10.5 higher or what?
Sure. So I know from number like this that we have as a floor or a ceiling in terms of margins, but in general, we expect to maintain, right? And there's no specific number like this that we follow that it will be there. And of course, market scenario is volatile in general, so it's very hard to pin down on a particular number.
Okay. And it's really good to hear after so long time we are working on that index, so which would give clarity to investor community. So just a clarity there, so that index would contain only value add versus non-value add, or also that would contain data where we can compare your growth versus industry growth or growth of our major customers?
Sure. So I think with the index, it would become more possible to track. It's in general very easy, very difficult to correlate between exact customer numbers and our numbers, and especially on a Q1Q basis. On a longer term basis, it's easier to do. But yeah, it would definitely improve the situation in terms of transparency, and we understand that, and we're working very hard along with some formation where we could provide that. And in general, for our newer products, we are more and more trying to focus that this point does not come in general.
So Asim, why I'm asking is, like if I look at your 9 months number, so as you mentioned in your initial remark, CV grew by maybe 43%, PV grew by 32%. But if I look at our revenue, so that has grown by 23%. I can understand like it would be directly correlated to the model. But in general, because 90% of revenue is coming from these two segments. So in general, what seems is our growth is lower than the industry growth. So probably if you can work something on that index, so that would add up to the transparency rather than moving here and there. I hope that clears my point.
Sure, understood, and we are working on this.
Okay. And one thing on the Abasparker JV, so can you give the number for quarterly and 9 months and similar number for last year to date?
Sure. I don't have these numbers in front of me, but we will share the same with you on quarterly and, sorry, you said quarterly and 9 month and last year. We'll share that. I don't have them put in front of me right now.
Great. And just last one point on the cash utilization. So if I look at your last 4-5 years balance sheet, so we have been always cash rich company. So maybe we had almost 150 to 200 crores of cash in maybe 2017-18 time, and which has grown to almost 3 times now, which is at around 600 crores. And looking at your run rate, and you don't require capex, so maybe we will be generating at least 150 to 80 crores of cash flow every year. So I think when you have some guidance on the how would you utilize the cash, because we have been hearing for the inorganic thing since long, but at least if that also is addressed, so that would give some more clarity, because there is no question about the your strength or the execution capability, but this piling up of cash you have to address sometime, right?
Absolutely, right. So we totally are working towards that, right? And our full focus is and our preference is to utilize this for an M&A opportunity for powertrain agnostic products. But there's no fixed timeline, as we want to be extremely careful with the D plus valuation, and be very, very cautious before doing it.
This is the operator. Excuse me. Management, your line is breaking.
Is it better?
Yes.
Am I audible?
Yes. Please go ahead.
Am I audible?
Yes, sir. Please go ahead.
Okay. Right. So, so it would be very easy for us to go for any deal, but we are being very careful about it. Nevertheless, we are, cautious that it is a good amount of cash surplus that we are holding, and we need to, deploy it carefully or return it back. And for that, we have, introduced a dividend policy also, which we started, I think, just about 1 year ago. And all things put together, I think we will, start deploying this cash and also returning it also to the shareholders in a higher rate.
So I fully respect you in terms of the conservativeness and not carried away by having a cash on the book. But still, I think you have to address in terms of how would you like to utilize in terms of which area or maybe some time frame, because when you say powertrain agnostic, it can be a vast area. So where we are focusing on maybe some EV part or something else, or what would be the opportunity size we would be looking for. So at least that will help us to understand and assess your company maybe for next 2 to 3 or 5 years down the line. Because by sitting on the similar page, we won't be in a position to understand and assess the company for the future growth path.
Okay. Sure. So we are looking to utilize it by powertrain agnostic. It means that parts, components which are cross-used across different powertrains, and there are just about 9 or 10 of those major parts, right? And we are on the market
voice is cracking. Hello.
Hello.
Mr.
Yes.
Renan, this is the operator. Your audio is breaking, sir.
Is it better?
Yes, now it is better, sir. Thank you.
Okay. Apologies for the audio. Right. So we are looking at the powertrain agnostic parts, which we expect there are just 8 to 10 major of them, and very tough to give any concrete timeline for that, because as right now we are in the situation of having good cash surplus, but we don't want to deploy it in the wrong areas, right? Just for the heck of deploying it. So being very conservative there, and we'll keep updated. There is progress on it, and at the same time, we have established a good dividend policy also, which we will continue to focus on also returning back to shareholders in a friendly manner.
So returning to shareholder would be.
This is the operator. Sir, we would require you to come back.
Thank you and all the best. Thank you and all the best.
Thank you.
Thank you so much. Thank you.
We have the next question from the line of Ankur Shah from Quasar Capital. Please go ahead.
Yeah, hi, thanks. Sir, can you give us the cash levels as on 31st December?
Sure. I think Purusan, you have the exact number?
Yeah, it is 588 crores,
Okay, sure.
including cash, cash equivalents, and bank balances.
Sure. Thank you for that. Secondly, sir, on a as it is basis, considering remains the same, and the sales mix remains similar, what is the impact of RD on for the next year for our company, like on a overall basis?
So on product side, content would probably increase by 10% in gasoline and roughly 20-25% in diesel. So depending on the mix and also the formation of RD on how customer sales go, there would be a little bit of an upswing in terms of the number.
So on an average, like, is it good to assume that even if the customer volume growth doesn't go well, or even if it stays steady, we will on an average grow by 10 to 12%? Is that right? Is that a right assumption?
I think to put a specific number on it is difficult, but yes, it will be a tailwind, right? So it will be a tailwind. To what degree it's a tailwind will have few variables, but yes, it will be a tailwind in terms of performance.
Sure. And so just on the cash utilization front, obviously I heard the previous answers, but just trying to understand your philosophy, whether you are looking at Indian company, you're looking at as a technology sort of a acquisition, you are looking at a platform, because that is actually a question on the terminal value of the company. So if you can give some specifics, because I think it's been quite some time on the cash piling up.
Okay, sorry, what specifics are you looking for?
Like how are we planning to use this cash, in the sense that are we looking for a platform sort of an acquisition? Let's say there is a company which is under operation, it already has OEM customers, or let's say we are looking at a technology which is ready, and we are ready to scale up that technology. What is the kind of mindset we are building to have these acquisitions? Or are we internally thinking of developing products, and like even if that is a possibility?
Sure. Right. So I think the acquisition front, what we are looking at is powertrain agnostic products, and probably from your reference, it would be more platform linked, where already the product is available and there with customers, rather than a very new technology because of the ticket size. And in terms of internally, for our emissions vertical, we don't require a heavy amount of capex. We do require capex, and we'll keep funding that, of course. But we are also looking at various ways to strengthen our suspension vertical through a partnership, or also to add some investments in that side.
Sure. Thank you. All the best.
Thank you. Thank you so much.
Thank you. We have the next question from the line of Manpreet Arora from Arora Wealth Advisors. Please go ahead.
Good evening. Thanks for taking my question. So the first question I have is, just trying to understand the total addressable market across PV, CV, and then tractors. So, out of the 2,600 odd crores that we do today in standalone, how much would be the contribution of as a percentage of the PV plus LCV?
Sure. So in our standalone numbers, it is PV and LCV. So as a revenue split, about 90% comes from exhaust, 6% from suspension, and others is about 4%. Sure. And when we look deeper into the exhaust numbers, about roughly 45-50% is PV and 50-55% is CV, which is LCV. The CV segment doesn't come in our standalone results. That comes in the JV results.
Right. Thanks. So, if 90% of 2,600 crores, it comes to around 2340, and if I assume that we have 30% market share, then total market around comes to 7,800 crores of a total addressable market on the PV LCV side. And on the CV side, we were doing around 180 crores to 200 crores. We said we'll be break even at around 200 crores. Is that a correct understanding? And since we are break even now, are we doing around 200 crores of annual run rate?
Sure. So to address your first part, that is that our numbers include the catalyst and the brick, so that exact math won't work out how you have shared in terms of addressable market. But on the second side, this is on value sales.
Excuse me,
roughly.
I'm really sorry to interrupt, sir, but your audio is breaking.
Okay. Is it better?
Yes, now it is better, sir. Thank you.
Okay, so I'll just repeat the answer. So for the first one, our numbers include the catalyst and the brick. So the exact math doesn't work out in terms of addressable market. On the second side, when it comes to break even or slightly above break even, we are roughly at that number in value added sales when we look at the CV side on the JV front, and that is showcasing now that they are making a small profit as well.
Okay. And so there also our market share is around 10 to 15%?
Yeah, it would be around that.
Okay. And so total value added sales, again, doing the math like that.
Back-end maths maybe would be better, just for the paucity of time, that you can share it by email, because it would then be a little bit tough for me to do it offhand.
I understand. So, where I was going to was on the tractor side, the addressable market, because in earlier calls you had mentioned that it is equivalent to what we're doing in PV LCV. And, we do around 8 lakhs tractors today, and, around, if I assume 8 lakhs of a average price of a tractor, it goes to around 64,000 crore market. And, assuming a 5% of that as a exhaust system cost, it comes to around 3,200 crores of market. So I was just trying to see where the addressable, because the PV LCV segment looks much larger than the tractor. So if you can help me understand if the market size is the same or a little less.
Okay, I could not infer the maths on this side that you've done. What I would request is if you can just share this by email, because it's very specific with a lot of assumption. And we'll get back to you, because I could not infer the back-end match of this, right? But if you share it, we'll definitely get back to that.
Sure. Thanks a lot. The other thing was, again, on the tractor side. So our current product is not required, current tractors that are out there. Only when Trend 5 kicks in. So we are only now on the 50 horsepower and above, and for the other ones, we are not there in the market today. Is that correct?
Sure. So for our product, as on pre-1st January 2023, it was not required on any domestic tractors, but now from 1st January, TREM 4 has been implemented. So very small share of tractors require a product. In TREM 5, roughly all the tractors will require our product, and we would be participating in the full market for TREM 5.
Yes. So currently, in the 50 horsepower and less, there are existing players who are supplying exhaust systems. And if you can,
exhaust system is not required. It's not required yet on those products in the Indian market. Globally, yes, there are players who do supply to that market in the countries which have this legislation already. But in India right now, it's not required. It will be required from TREM 5.
No, so what I was trying to understand was the current tractors out there also don't require any exhaust system, or they have a exhaust system?
They require a thing what they call the muffler. It's a different product. They don't require any emission system. A better way to put it is they don't require any emission system like ours. They do require some different kind of product like a painted muffler or something like that, but it's slightly different, and that's a very low value-added product. But the emission system, that will be required from TREM 4 and TREM 5, and largely from TREM 5.
Okay, because, we've been reading about players like Mangla Tubes doing a joint venture with Cornaglia, and then SM Auto with Provencia, with a Finnish player. And then, you also mentioned that one of our French and American competitors are also present in this space. So once this TREM 5 triggers in, do you see more competitive intensity compared to now what it is? Or
it's going to be the same. It's going to be the same in terms of intensity, slightly lighter. And we do expect the same competitive profile that we have right now to maintain there. And for TREM 5, most of the development work is already done. So we have a very good feel for the business development side of that. Right? So we see very similar kind of competitors. And there are some periphery parts like mufflers and all for that, which we don't participate in. For that, I think some of these companies might be working.
Okay. One last question on the, CNG side. We've been, again, with CNG prices coming down, we're hearing that, on the CV side, LCV and MHCV also, some players talking about, moving to CNG as a fuel. So how do you see that impacting, Sharda in terms of exhaust systems, positively, negatively, neutral?
Sure. So I think it is largely neutral. CNG in general, has production, what we've seen on the market has gone through a lot of volatility based on the prices, but most of the OEMs are preparing for all powertrain scenarios, and one of them is CNG, and we are actively working with almost all of our customers for the CNG platforms also, and it is likely to be neutral when it comes to switch over from CNG if it happens, and in general we are seeing a lot of development work for the future and CNG coming in.
Okay. Just to follow up on that, Ashim, because customers will or users are usually going to move away from diesel to CNG, and our diesel offering is relatively has more content per vehicle, and if CNG comes in, do you see some downward pressure there on the content per vehicle?
No, so CNG also has a good content per vehicle, and CNG is a newer technology, so it is hard to see what tech platform will each OEM utilize. So it goes into the technicalities onto their engine. But in general, I think all powertrains is what the preparation is going on for.
Okay. Yeah, thanks for taking my question. I'll come back.
Thank you. Thank you so much.
Thank you. Ladies and gentlemen, due to schedule time, we will take the last question from the line of Sonal from Bowhead. Please go ahead.
Asim, Happy New Year. Am I audible to you?
Yes. Wish you a very happy New Year. You're audible.
Great. A couple of questions. Firstly, what would be a capex for 2023 and for 2024? And the first 9 months, how much of this capex is already done?
Sure. I think the exact capex figure for the 9 months is 5960 crores so far. Purusan, just if you can validate.
Yeah, you are right. It's close to 60 crores.
So, yeah. And roughly at this run rate, we are expecting to go for the next couple of quarters.
So as far as the PLI scheme is concerned, does this take into account the capex for that and any development or any clarity on the PLI scheme for you?
Yeah. So the PLI scheme, yes, a lot of the products which we are doing capex also come under the PLI scheme which we approved for. But the PLI process requires a clearance from testing agencies and a lot of other activities. So more and more clarity is coming in on how to go about PLI. But that is still underway, and we expect at least 1 or 2 more quarters where till we get a finite clarity on PLI. So as of now, we are not considering anything in our books with PLI to be on the conservative side, but we are actively working on this scheme, and some of the capex we are doing do involve the products that come in the PLI scheme.
But is it safe to assume that a larger capex can potentially happen if we have full clarity on the PLI?
Sorry?
What I'm trying to understand is, once you have full clarity on the benefits of PLI, and for your products, is it that your run rate for capex could potentially increase after you have that clarity?
Yeah, we will maintain him. We'll maintain the same only. It's just that within the PLI scheme, definitely we have a few products that come in. And once we get exact clarity how to go about it, we'll be in a better position in a couple of quarters to discuss PLI. But a lot of work is going on, and PLI will be an added benefit only from a financial perspective.
But what I was trying to understand is there must be a minimum capex requirement for PLI, and that would mean that you may have to accelerate your capex if you were to take those benefits. Or it's too early for you to answer those questions.
Yeah, understood. We are within, we are keeping naturally.
I'm sorry to interrupt, sir. This is the operator. Your audio is breaking.
Yeah, is it better now?
Yes, please. Thank you.
Okay. So we are within the thresholds of the PLI capex so far, and we expect to maintain that also.
Sure. Thank you. 3 more questions. Firstly, any plans for Noida plant sale? And, considering it's near the airport, has the market value of that increased significantly? And, is it more like 150 to 100 crores, or this is a very aggressive assumption from my side?
Sure. So we are not, yet disclosing any further valuation, but definitely we do have that. And in addition to the cash, that does come into our calculus on M&A. But till, we have a finite use for that, I think we would not go ahead with it. As you rightly noted, that it's all in prime areas, and it is has some upside to that.
As far as the tractor market is concerned, one of the participants had asked you a question, and maybe it wasn't clear, but what I think I'm trying to say is that, the size of the tractor market is roughly 8 lakh to 10 lakh, and if the, the per vehicle exhaust system, is it like 30,000, 40,000 per vehicle, and therefore, can we say the, size of the market is somewhere between 2,500 to, 4,000 crores, or, some broad perspective on it, We are not talking about value-added sales. We are talking about overall sales, and you would have some perspective because now TREM 4 is, you would have some TREM 4 orders, so you'll have some very rough idea. We understand that, it's difficult to give an exact number, and the market size could vary by 20-30%, but that's normal for us to, incorporate as analysts. but a very, very rough cut would definitely help all of us.
Okay, understood. Right. I don't have a rough cut number prepared like this, but in general, it is a good market size. And also, that should be a very positive about it, and the business development cycle is looking very good. So we will definitely be able to maintain or increase market share to what we look at in the tractor market. I don't have this kind of a rough cut guesstimate number, but let me work on it and I will share the same.
Sure, that will really be of great use to everyone. We understand that, being a very conservative company, you may not want to give a number in, because nobody knows what that number will be in the future, but a very, very broad range also helps us as analysts to, understand the size of the potential, Nobody would hold the company to that number, specifically because obviously we all understand, we deal with so many other companies in the same sector, other sectors where the information is not available. So it will be great if you can share in next quarter. Two more things, sir. Firstly, as far the cash is concerned, maybe, many people have suggested, but maybe, you could have a policy that, you'll keep a minimum cash of 500, 800,000 crores, whatever number you're comfortable with for future acquisitions. And beyond that, you'll distribute a certain percentage of your future profits till you find, further users of that. So maybe, something on those lines over next 6 months, maybe, whatever that number you guys are internally comfortable with, whether it's 1,000 crores, 500, doesn't really matter, but a broad direction perspective, that maybe you'll keep up to this number, so that it helps the company at the right time. Having cash is always, a big edge, because, these opportunities come unannounced and you want to have enough cash. But, some broad sense, that's what I think the other participants are looking for. They are not asking to do an acquisition immediately or in next 1 year, because, obviously till you find the opportunity, there's no point in spending and, throwing money, and that's a very sensible policy to have. So that was just another suggestion of mine, sir. And, as far as your data is concerned of value-added, non-value-added EBITDA, we are actually pleasantly surprised because, whatever we are tracking internally, it is now matching for last 3 quarters. So I'll be happy to discuss with you, whenever we speak next offline. But, for last 3 quarters, your data is exactly matching with your EBITDA at a broad level, Margins, I understand, will never match because, it's a function of the product mix and pass through of various costs. So, thank you so much for this opportunity.
Okay. Thank you so much, and thank you so much for the suggestion as well. And we will definitely have an internal discussion and work towards that, but appreciate it. And also on this index, as we said, we are working towards that and will share it.
Thank you. Ladies and gentlemen, that was the last question, and we will now close the question queue. I would now like to hand the conference over to Mr. Puru Agarwal for closing comments. Please go ahead.
We thank you for your participation in our earnings call today. We hope we have been able to address all your queries. However, if you have any further questions, you can get in touch with our IR advisors, Strategic Growth Advisors. Thank you and have a good evening.
Thank you, members of the management. Ladies and gentlemen, on behalf of Sharda Motor Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you. Bye-bye.